All right, good evening, everyone. Happy post Thanksgiving, whatever, Black Friday. It's Friday, but I did want to cover today's price, kind of just backtest a little. Since we didn't trade today, so we didn't take any trades whatsoever. I wasn't interested in trading today, but let's see what opportunities we could have taken if we were trading and it wasn't a holiday week. So yeah, the only reason why I didn't trade is because we've had a decent week already, so there's no need for us to push it. No need to push the envelope here towards the end of the week, given that it was a Thanksgiving week. So I prefer to just conserve capital, back test, and then go into the next week, open minded, ready to execute whenever the opportunities present themselves. Now, there was a big drama going on because of this huge gap here. As you can see, it's not your usual timing of shut off and turn off of the market. So we did have this huge gap, that was considered the CME halt, data halt, or whatever they called it. It was like a cooling system failure. I guess a data center was down or something like that. So here, I actually have the news right here. So it looks like it was over. Well, yeah, we can see that it was 10 plus hours here, right? And then they called it a liquidity vacuum, where many traders and brokers could not price or trade those contracts because live data and systems were unavailable. Okay. So yeah, there was just no price available. That's interesting. So okay, so this is what happened. What caused it? Trading was halted because of a cooling system failure, quote unquote, at the data center operated by Cyrus One that supported CME's trading infrastructure. Interesting. So that explains this huge gap, right? So we have this huge gap from 9:40 p.m. New York time to the next day, 8:35 New York time. That's over 10 hours for sure. But it's very interesting if we treat it like a new week opening gap or a new day gap. Obviously, we would want to have all that price there, but we don't. We see how this gap is pretty much used like a new week opening gap or so. But anyways, I would still be bullish. Let's get into the backtesting session. I would still be bullish, um, given that we do have this SMT. Yep, we have an SMT here. So as you can see, we've retraced into this higher time frame PDA right here, this 1 hour inefficiency. And then on NQ, we failed to. So I would come in more bullish than bearish, given the structure that we've been having. But it is Friday, so we could see a retracement. If we could see a retracement, I would be targeting that 1 hour inefficiency. But again, I'm expecting that low to be untapped and protected on ES, so I wouldn't want to see lower prices. And yeah, so with that in mind, obviously this is all in hindsight. It's a lot easier to read the market in hindsight than it is to do it in live data. But for the purposes of backtesting, this is where you really want to get down and go through all possible possibilities that you could have seen an opportunity or where you could have seen your model fail and then potentially gone through some, a loss or whatever. So right here, we have our open at 9:30, right? We'll mark that out. And then let's see what else happened. So just on the 5 minute, this looks incredibly messy, right? We have ES pushing higher, being the stronger indice, while NQ is just continuing to consolidate. So right off the bat, this is looking a little bit ugly, right? But that's just looking at the 5 minute. I would love to stay on the 5 minute and the 15 and kind of see some type of setup form there. But obviously, we're just going to go ahead and backtest this on hindsight. So we see the sweep here of these relative lows, right? And we sweep here on ES. So if you're looking for a scalp trade, this right here calls my attention as soon as we see this sweep, right? I want to drop down to the 1 minute and see if there's anything I can target potentially to the previous highs that we have up here that are stacked on ES. Pre-market high. And then we have this high that we created. So 9:30 we open, we manipulate higher, and then we start displacing lower. Not quite displacing through this low, creating a wick closure. So this wick indicates to me that we are going to continue to move higher. Remember, our bias is bullish, so we want to be taking trades in that direction. Notice how we come back to this discount wick. We respect the 25% quartile of that wick, and then we start to displace higher. So within this wick reaction at 940, I am interested in seeing how price action behaves. I don't think I would necessarily take a trade, just given that I would want to see something very, very clean. But I'm looking at the 1 minute, and this looks absolutely clean. But again, I don't want to get induced. Probably on a Friday, I wouldn't have taken this, but this does look really, really nice. So if we're bullish, right, we want to see bullish PDA raise get respected, and we see this giant wick come in on the 5 minute and respect to the upside after sweeping this liquidity. And same for NQ, I'm assuming. We're going to have the same gap. There it is. So this looks very nice. I like this reaction, bullish, and completely inversing this sell side imbalance to the upside, and then coming back and retracing and using these two areas as a form of support to price higher. Now, if you're scalping and then you're just scalping for this high or for this high, obviously your trade would look a little like this. Let's put a long toner for the visuals. My stop would be below here because that would cover the inverse and also would cover the buy side imbalance. And then I would be targeting that high for, I would be targeting the 1 to 2 fixed RR, but more than likely taking off at this high. As you can see, it does provide you the 1 to 2. It does take quite a while. This is a lot of mental capital that you're going through. But again, once your trade is in, hands off, full control goes to the marketplace. Now, something I do like to do while backtesting is seeing if there's an indice that creates some type of SMT with one another. So that way it's good to note it, because in some cases you could be the divergence between the indices and get taken out of the trade, and the trade goes in that direction. Just things to note, I guess, when you're backtesting. But I typically like to take the trade on the stronger pair, so I would be favoring the S&P in this case and in this trade. Why the S&P? Because we covered that the stronger pair was obviously S&P 500. That was moving a lot quicker than NASDAQ. While NASDAQ was still consolidating, S&P was already taking the high. So at that point, yeah, the trade would be coming off. And NASDAQ, let's see when the SMT was put in. For me, the potential SMT, not an SMT. So highs taken here. Okay, let's go on. So these highs are taken right there. So I would take off the trade if I was on NASDAQ right there. So we wouldn't have gotten the full target. Why taking it off there? Because this potentially could be the SMT. As we can see, we start heading lower, but we simply just take some sell side internally, and then we displace higher. But yeah, that's something to note. There was a trade. This is the one I was forward testing in the PM session, but I did not take it. I only took it on paper, and I posted it on the Instagram page. Just a paper trade, forward testing. We can see that we have a very nice reaction here. So obviously, if we're continuing to favor bullishness, we see that we displace lower, leaving this 5 minute gap. Now this 5 minute gap, yes, it can be used to the downside. That's what it's intended for. But for me, I see it, if I'm bullish on the day, I want to see this gap get completely disrespected. But I need to see clear signs that we're going to be disrespecting this gap, right? So we displace lower, and then we continue to displace higher. Now this is good, but this is really good when I see this huge inducement to the downside. And then, because at one point this was a huge black candle, just printing lower, and then it completely recovered and then ended like this, a weak down close candle. I would want to see some type of structure internally there. And that's the trade I think I posted on the Instagram. Yep. So this is where I would like to go long, right? And stop below the bodies, because that would cover my inverse and the 1 minute. And then I would just be targeting these highs here, guaranteeing the 1 to 2. You're pretty much in very little drawdown, goes, and then comes right back, retests it. Once it's being inversed, this 5 minute becomes your inverse for value gap. Permissible for price to create some type of inducement play in here. This is tricking a lot of traders into going in short. They see these big down close candles just for it to get completely ran through and go to the other side. So this would be the trade I probably would be interested. This over this, 1000%, just because it looks just so much cleaner, in my opinion, for what I'm looking for. But nothing too exciting from there. If you left the runner to see if you can get a higher, if you're on a standard deviation from here, from this price leg down higher, you want to run for higher prices for one standard deviation, right? And then two standard deviation ultimately is the final target there. If you wanted to leave this trade, but you would have to leave this trade. Typically, when you're trying to leave runners like this, you don't move them to break even, because then what would happen? Boom, break even. So the trade would have to have its original stop and let it do its thing. If it comes and stops you out completely, then it is what it is. But as you can see, this trade would have completely given you the 1 and the 2 standard deviation as well of this price leg down, since this is where our trade was entered. But that's pretty much it. Very little stuff going on today. But these are the conditions that destroy a lot of people, and I think destroy a lot of accounts. You have a lot of back and forth price action, and if you don't have a clear bias, you're not reading the market correctly, you can definitely get chopped up in this situation. I know I have been before. This is how I made a lot of mistakes before in previous years, going into the market and then trying to pretty much scalp all this stuff. Even though you absolutely can, but that doesn't fit within my criteria, my models. I ask for more. I want to see more confirmation. I want to feel a little bit safer when I'm in the trade. I don't want to feel like I'm uh, anxious, I guess, when being in a trade. If you're just scalping the market, because things can happen at any time, right? But if we're just looking at the 1 minute time frame, we can see that we are respecting this order block. And then I don't know if scalpers, high frequency scalpers, are taking, trades from here down to the downside, just targeting these lows. They take it again back down. Who knows? I don't trade like that. I know people can trade like that. But everybody trades differently. But yeah, that's pretty much all I would really note from here. We have a similar trade here on ES, obviously, right? I believe there's a huge S&T. Is there? Let me see the 1 minute. Yeah, there is. Yeah. So this is what I'm talking about. If you would have been in this trade on ES, right, and your stop is below that low, you're targeting the high, your target would have got hit. But then if you left a runner like you did on NQ, it would have came back, stopped you out, continued lower, and notice how we sweep this low and we continue lower on ES. And then on NQ, we failed to do that and sweep this low and then shoots up higher. So we just happen to be on the right pair if you were trading NQ in this scenario. But you could very well be trading ES. Now, why would you choose NQ over this ES? Well, just looking at in hindsight, we've already expanded a lot more on ES, and then on NQ, we haven't had that massive expansion. So if you're going to take a pair and you're expecting an expansion, it's likely to take the one that has not expanded yet, right? Kind of common sense. So that's how I would view it. But yeah, that's pretty much my 2 cents on just this quick little backtesting session. You do want to go through a lot more, but we would be here forever and the video would be a lot longer. You want to make sure you go through potential setups that you would have taken and that would have stopped you out and that potentially would have, cooked you and resulted in a loss. So do backtest those. Don't just backtest winners, backtest scenarios where you potentially could have took something that would have lost. But in this case, we would have been bullish, and potentially this would have been the only trade I would have liked taken. Not really this one. This is just being backtested for the sake of it. But also notice how we use these gaps. When we have these giant imbalances, either a new week opening gap, new day opening gap, mark them out and just realize that these gaps will be retraced to, and then we'll find sensitivity in those areas to then price higher It's incredibly interesting how that gap continues to be referred to, right? Um, and then we can continue create that as a confluence, add that onto your narrative of being bullish, and add that as an extra context to that trade. So if you wanted to see this inefficiency fail because you're bullish, and then we see this reaction here, the sensitivity point at this huge imbalance, and then we displace higher, and then you still want more confirmations when we get this wick here, and then we get the clear structure, right? Because I'm sure there's an entry if your only confluence was this, right? You got your order block here, and then we continue to hold down close candles. But I would prefer this over this 100%, right? Because this would give me that additional confirmation that, yes, we are going higher and we're still following that bullish bias. All right, going into next week, I'll probably do another review on Sunday once we have an opening price. But yeah, this huge down move we had, I really don't consider it anything much. A lot of people get scared like we had here. I've been buying Ethereum as well, and I do post about Ethereum on my on my Instagram page, but I've been talking about Ethereum, going to higher prices. I have some higher prices going for Ethereum, and here are some of the higher prices that I can share. So at 1 standard deviation, 6,834 and 74 cents. That's my price target for Ethereum. I would like to take a good portion of my position off here. But I do, of course, see if we're going to be pricing higher, of course, we have to have some type of manipulation, like lower. We don't just continuously move higher and never come back. This is meant to scare a lot of people to sell out of their position and whatnot. I could be wrong. We could continue lower into these areas, but hey, I'm really bullish on Ethereum. I'll put my money where my mouth is. I have a pretty good sized position into Ethereum. But yeah, I do believe we will be pushing higher from here. So I'm expecting higher prices for Ethereum here. Um, we've come down into the monthly. This is not a 1 hour. This is a monthly buy side imbalance, sell side efficiency. We've completely rebalanced that, and we've also come down into the inverse for rally up here, along with this massive breaker that we're holding. I do want to see the next monthly candle be higher for Ethereum from here. So if you guys were able to buy at the levels that I was putting on my Instagram at 3,100, 3,200 and so forth, I was luckily able to buy some there, and then I got some more once we tapped into this inverse. I did not buy any more here at these levels. I bought very little, but nothing meaningful. So we'll see how it plays out. My price target, of course, I would take a partial here again once we take this high, but I would want to see that 1 standard deviation from this price leg down, to see if we can get some higher prices at the $6,000 level. But we'll see. Just again, come in with an open mind every time you trade. Understand your bias, which is the most important thing. How do you obtain a bias? You look at higher time frame PD arrays. Look at the daily. Look at the 4 hour, right? Understand order flow and where exactly price is going. What is it likely to do, right? Just because you see this doesn't mean, oh, I'm going to be bearish forever now, because likely when we have exaggerated moves, we can have exaggerated moves to the other direction as well, right? As fast as they fall, as fast as it goes up. So yeah, but anyways, I'm just yapping here now on a Friday. So I hope you guys have a great evening. If you guys have any questions, drop a comment, and yeah, follow the Instagram page. Just another transaction. Have a good evening, guys.